Okay, we're now on the next learning objective, which is learning objective 4 of this chapter. And this is, of course, Who Must File? A classic game show that we love to see. Who must file their tax returns? Now, here is an awesome chart that tells us what we need to know. If our filing status is single, married filing jointly, married filing separately, head of household, or qualified widower. If it's single and at the end of 2020 you were under or over, so we're going to start with under 65. Now, for tax purposes, they count if you were born on January 1st of 1956. You are considered to be at age 65 at the end of 2020. Now, if your spouse died in 2020, or if you are preparing a return from someone who died in 2020, we actually need to look up Publication 501. Now, we're not going to discuss too much about that right now, but again, it's always good to know. Again, you can still file. It's a married filing jointly usually, or qualified widower, depending on when that happens. And we'll talk again about filing if somebody has passed on. Now, if you're under 65 and file a return if your gross income was at least $12,400, you need to file. Now, when we talk about gross income, just like in the previous video, this does mean all income you receive in form of money, goods, property, and services that isn't exempt from tax. There's a few items that are exempt, but they're mostly government items, maybe a housing if you sold a house. But so this also includes any income from sources outside the U.S. or from the sale of your main home if you haven't excluded it all. This basically would also mean Bitcoin, any foreign cryptocurrency, doggy coin. I think that's another one. That one got real popular. So, we don't include any Social Security benefits unless, because that's one of the exempt ones, but there is exceptions. You are married filing a separate return and you live with your spouse at any time in 2020, or one half of your Social Security benefits plus your other gross income, and any tax exempt interest is more than $25,000. $32,000 if married filing jointly. It's always a separate between single and married filing jointly. If A or B applies, either again, you are married, filing a separate return, but you live with the spouse, or one half plus your gross income is more than $25,000. You need to basically look at the instructions to the taxable part of Social Security benefits. You must include gross income. Again, we're going to go over Social Security. I just love reading the law of who must file. Hey, if y'all haven't laughed on that, that's up to y'all. But I do enjoy Who Must File, classic game show. Now, gross income also includes gains but not losses reported on Form 8949 or Schedule D. Gross income from a business means, for example, the amount on Schedule C, line 7, or if we happen to have farm, using our Schedule F, line 9. But in figuring gross income, don't reduce your income by any losses. Okay? Including any loss on Schedule C, line 7, or Schedule F, line 9. Basically, we only count the income and no losses. So if it does reach over 12,400, because the IRS probably knows at least most of those forms that you have received, they have also received, we need to file. If we're 65 or older and that gross income is $14,050, we must file. If you're married and filing jointly, according to the IRS, if you didn't live with your spouse at the end of 2020 or on the date your spouse died, sad, crying emojis, and your gross income was at least $5. Wow. You must file a return regardless of your age. Wow. So, married filing jointly. That one has some restrict. Only $5. I think those things should have been with married filing separate. But yeah, married filing jointly does have a little bit of trickality. So, and of course we're talking about two people. So, because if you didn't live with your spouse at the end of 2020, that is basically filing separate. That's one of those jobs of filing separate. Same thing if they died and you weren't there. Yeah. I don't know. Sometimes I think a little bit iffy on the PowerPoints where they put their fancy stars. But either way, under 65, both spouses, you have to file both of your incomes together equals to $24,800. If you're 65 and older, you have two options. One, if only one spouse makes an income of over $26,100, you need to file. If it's 65 or older, both spouses, combined is $27,400. Okay. Remember, filing separate. I think this is basically what we just discussed. Again, any age, $5. Yeah. So, don't really like married and filing separate. And we're going to get into it since we're here in the state of Texas, the community property state. We'll get into a lot more of that married and filing separate versus jointly. Head of household. If it's under 65, that's your age. It's when you reach 18,650. If it's 65 or older, 20,300. Qualified widower, widow or widower. Under 65, again, 24,800. 65 or older, 26,100. Now, did y'all notice the numbers? Aren't they really similar? Especially the under 65. And then it dawns, those are the standard deductions. Yes. So if you beat out the standard deduction, you need to file a return. Your gross income is going to be more than your standard deduction number. That's how we always play it. As you can see, 65 and older is, of course, their standard deduction. After 1,300 and stuff getting added on, all the little extra stuff that we can actually deduct. So, let's always be cautious and making sure, except for married and filing separate. That's the only one that throws a little monkey wrench in everything. But it's okay. So, if a parent or someone else can claim you as a dependent, okay, you must still file a return. Well, you still may have to. For example, a single dependent who is not age 65 or older or blind must file a return if any of the following apply. your unearned income, your unearned, was over 2,750, or 4,400 if 65 or older and blind. There's the and. Now, unearned income is basically interest, dividends, stuff you didn't actually have to work for. It just came to you. Your earned income, if that was over $14,050. And of course, $15,700 if you happen to be 65 or older and blind. Your gross income was more than the larger of the 2,750, and again 4,400, or your earned income up to 12,050 plus 2,000, 3,650 if 65 or older and blind. There are definitely several other conditions that exist when determining whether a dependent must file. This is, of course, based on age, earned and unearned income level, married or single, and if the dependent is blind. We have a lot with dependents. We are going to be discussing completely about dependents a lot more as we go further. Okay? Now, other situations. Okay. Other situations that we may end up seeing that you must file. Because again, who must file? 1. You owe any special taxes, such as Social Security and Medicare tax on tips. So, receive tips and you need to declare that Social Security and Medicare tax. 2. You have to pay alternative minimum tax, which is a possibility, tax on an individual retirement account, or recapture of taxes, or the first-time home buyer credit. Nice. 3. You or your spouse is filing jointly, receives an HSA, Health Savings Account, an Archer MSA, or a Medicare Advantage MSA distributions. Okay, so those are again medical, and those are benefits, fringe benefits that employers can provide. And if we did receive any distributions, we do have to declare those. Right? You had net earnings of 400 or more from self-employment. You had wages of 108.28 or more from a church or qualified church control organization that is exempt from employer Social Security and Medicare tax. Yeah, those are fun. True story though, but there is forms to actually perform if a priest or any clergy, they can actually file to be exempt from Social Security and Medicare. But they have to do it like within like the first 2 years of receiving 400 or more in income. Yeah, and that includes housing allowance. Alright, next, if we have advance payment of the premium tax credit, because we still have those, or health coverage tax credit were made for you. And then you are required to include any amounts in income under Section 965. Again, another big old list. Not a lot to go over on that one. Again, we're doing a little bit more basic, so we're not going to dive too terribly deep into each of these sections. Alright. Also, since this is a rare occurrence for our 2020 tax year, we also have, if you want to claim the stimulus payment, if you have not received that second batch, which we will see if Cengage has kind of updated to include the second one. If not, we'll make our adjustments. But yeah, If you want to claim any Social Security not Social Security stimulus, you would have to basically file a tax return. Or you can go to the IRS if you really don't qualify. I generally go file a tax return. Just makes everything on paper. And basically it makes it a lot easier. But yes, you can do a non-filer one. And that's just going to irs.com. Anyway, last thing. Now, you must file hard copy at IRS campus processing site or e-file. Again, electronic version. Either way, you must send one to the IRS. Now, generally, this is the 15th day of the 4th month. That's how they actually put it. Instead of putting April 15th of the year following close of a tax year. The reason why they don't put April 15th, because this is the rule that applies to other tax returns. Now, if the 15th happens to fall on a weekend, returns are due next business day. There's only 2 exceptions. In Maine and Massachusetts, Patriots' Day may fall on April 15th. Thus, returns are not due until April 16th. Same thing if it's a weekend and the next business day is Patriots' Day, it moves to the next following day. In the good old DC, District of Columbia, we have Emancipation Day, which is observed on April 16th. If that falls on Saturday, it is observed on April 15th, and following day is extended. Same rules apply. Basically, if there's a holiday, things get extended, but not long. In fact, 2020 was probably the longest we've ever seen an extension of the tax due date, being all the way into June or July. All of a sudden, mine just decided to blink on that. Alright, so another random thing in the PowerPoint. Discussions. Okay? Now, discussion can be as much as you want, and you can describe a situation in which you would not have to file taxes if you are a single person. Is it possible for 2 people who are the same age and have the same earned income and marital status that one is required to file and one is not? This is a good decision. Well, from what we know, a single person would not have to file taxes if his or her gross income was beneath $12,400, assuming the requirements for dependents also apply. Again, below the standard. Now, 2 people of the same age, earned income, and marital status could have a different filing status based on a number of factors. Wonder what they are. Well, of course we know. Primary factor is what their gross income is. For example, one individual may have more unearned income, which raises the gross income over the minimum limit. Another factor could be if the person is a dependent. Also, the person is blind. That also may throw in some fun little stuff. And there's many other reasons. So yes, they can change. Okay, so that's it. We're going to leave it at the discussion. Little post. If you think of anything else, you're more than welcome to let me know. Hey, always works out. And again, just like always, if you have any questions, you know what to do. I will catch you for the next learning objective.